welcome to this segment of our Future of Insurance podcast series with industry leaders. Today, I am just absolutely thrilled to have David Smith with me. David is the CEO of a Futurist firm. He's going to give you a little bit of background, but David and I have known each other for well over 15 years. We first met actually in China. We were both speaking at an event in China, and we struck up a conversation, and the conversation has never stopped since, has it, David?
Absolutely not. It was a memorable moment and an amazing conference, and I've enjoyed our 15 years together. I didn't realize it was quite so long as that, but it's been really good.
Yeah, I agree. So David, why don't you give me a little bit of background on yourself, and because you've got an interesting background that you bring to the table for insurance, in particular, an outside-in perspective, and then talk about what you're doing with the insurance industry around innovation right now.
Yeah, okay, Denise, that sounds fine. I guess the primary thing is I've sort of been in the technology industry for 40 years in technical roles, in leadership roles, in strategic marketing. And going back to 2000, it just seemed to me that we couldn't see the way forward in the $2 billion financial services business I was responsible for thinking about its strategy. So I started looking over the horizon, and at that time I found people beyond marketers, beyond analysts and commentators, all of which are tremendously valuable, but I found futurists, half of which are barking mad, the other half are fantastically insightful, thinking about how we're going to lead lives in the future. And those are the people who inspired me to co-create the Global Future Forum inside a large IT services firm. And ultimately, I took that private in 2006. And really, since 2000, I suppose I've been acting as a futurist, and I'm comfortable with that title. But my background is strategic marketing and strategy and technology beyond that.
That's great. So I know that, you know, when we met, you were actually pretty actively involved speaking across a wide variety of industries, but you've really had some really interesting experiences with regard to working with some insurers to try to get them to kind of look forward and not just look over the next year, 2 years, which has been our traditional planning process, but really to look out the next 5 years and potentially out to the next 10 years as the possibilities, and what that's going to take, both from what I call a leadership standpoint, but also a execution standpoint, you know, so that people are responsive. You know, as we've seen in the industry, AM Best has done a research last fall that indicated that CEOs, 75% agreed that innovation was top of their strategic agenda, yet only about 25% of them are really looking at disrupting themselves. So they understand it, but they're not really executing on it. So what's been your experience, David?
Well, that's a good point. I mean, the widest point about all of that is we do work across many different sectors. I have specialized for, I suppose, 20 years or so in roles in strategy and futures thinking on the insurance industry, both the life side, the annuity, the assurance and the insurance worlds. And I suppose I've been very vocal thinking about how technology is going to ultimately change the very nature of the industry and the offer and the products and services, and been at length with reports and papers and speaking at conferences and chairing conferences in London and elsewhere in the world, helping people think out of the box about what are we fundamentally going to do differently in the future. And that's really, I think, where we're beginning to see the green shoots of change emerging in the industry that are rethinking the absolute fundamentals of what the industry offers. And number one, I suppose it's worth saying, to me, it's probably one of the most valuable industries in the world. It enables people to take on risk, to do things they wouldn't otherwise do. And that, I think, is often just completely lost in the obligation to engage with insurers, the fear of being without insurance on certain occasions. But it's the opposite. It's an enabler. So we think about where we are now with InStec propositions. And again, I think there are many, many quite exciting propositions in InStec. And many of the ones are being funded now. I think we're up to about 79 billion or something crazy. across 1,500 companies or some such thing anyway. Vast amounts of money going into tech startups very often, but people taking beyond that, the processes that need to change for companies to start thinking about. But I suppose just to say right up front is you could argue that some of the instechs are actually the R&D functions and the innovation hubs of existing players. And I think it's not uncommon it's not uncommon for big firms to get to the brink of failure simply by being too successful and not being prepared to change, and then absorbing the latest meta change that's changed their industry. I mean, Microsoft's a great example. They probably got 2 or 3 of the major shifts in the industry, including broadband, I might add, completely wrong. But they bought themselves back in because they had a bag of money, and they've thrived ever since. So it's really interesting to see how the market's currently poised in terms of people engaging and changing what they do.
Probably why where we see a lot of insurance companies, particularly some of the larger ones and reinsurers as well, the tier 1s and the tier 2s in particular, are setting up their own venture capital funds at investing in some of these insurtechs, not just the technology companies, but also the startups that are insurance startups or MGA startups that are kind of introducing new kind of innovative products out to the market as almost a way for them to experiment, but also as a way for them to make sure that they're capturing that opportunity. Would you agree?
I think they're hedging their bets, and I think it's exactly the right thing to do. But if you see the potential for your core business declining, then to invest in those businesses that are going to eat your lunch is exactly the right move. I would do exactly the same thing. I think if you look at many of the larger insurance companies, and I work very closely with some of the big ones still, I love to remain engaged. I'm speaking at the North American Association of Professional Agents conference in Orlando, assuming Orlando's there. I will be there in a couple of weeks as a keynote speaker, but also I'm joining their new digital initiative to think about how that whole sector of the supply chain needs to rethink its proposition. And it's great, it does. I mean, nobody is fundamentally wrong now, but some of them can be wrong fairly soon because of the capability of new business processes, new approaches, new paradigms. And some of the larger firms, I like their attitude in terms of having a very flexible mentality. The culture seems to be at the very top, or the point where they're engaging. They're happy to engage with startups in a myriad number of ways. Some of it can be investment, some of it can be sharing a customer base, very often the thing the instechs haven't got, sharing money, buying shares, sharing data. There's many new models that people can engage with. That engagement's needed, and that's the bit that's really got to change and is changing amongst many insurers. I at least think that.
Yeah, interesting that you're speaking with that agent forum in a couple of weeks, because that's a conversation we've been having with some other leaders. We had it at Convergence actually this year in April at our customer event. And one of the things that's really happening in the marketplace is this, you got a lot of agents and brokers that are retiring, and then there's a lot of merger and acquisition. It's consolidating in the agent broker space. And you're trying to attract in this next generation of agents and brokers, and they want to do things very differently. And, based on our research, and I know you and I've talked about our consumer and our small, medium business research, we see that agent and broker still has a vital role, particularly for complicated products. Yet we got to find a way that they're not isolated from the entire process and technology, and how do we integrate them, and that they're more of a part of the process and engaged with the customer all the way through with the insurer, and that makes it really easy to do business with for both the customer but also for that agent and broker. Agree?
I think it's exactly the point. And the things that make brokers attractive to people who want a long-term relationship with someone who they can trust and confide in is the very thing that people will have more time to do when repetitive, codifiable tasks will be taken over by technology. So it should free people up to be more cognizant of what people want. People should be able to spend more time spending time with customers, listening to their issues and concerns, formulating strategies and plans with them. Because in truth, none of us really want to sit at home even on a wet day, and ponder over 25 different versions of insurance. And so do I need well man? Do I need a key player? Do I need personal lines for this, that, and the other? Do I need health and property? And I'm going skiing and some dangerous sports and the cars needs covered one sort or another. We really haven't got the time for all of that. I've got risk that needs covering. And if I've got somebody I trust who's genuinely in relationship with me and cares a little bit about me and knows a bit about me, I've given them the right to know that, then I think there is very much a role for an empathetic agent and broker in the system. Because on the other hand, transactional type of property casualty in particular, and some forms of health and on-the-spot insurance, we may transact simply just with personal digital assistants making decisions for us, and we engage with them. But that's not everything. It's not like all brokers are now irrelevant. It's some of the tasks that brokers do will be automated. Discuss. So it's a change in the very nature of the role. You can't preserve what it already does forever, because that really won't work either. But they've got a great future if they're prepared to embrace it.
Yeah, so one of the things as a futurist, David, you look at some of the key trends that are out there at a macro level and the implication of those, to the industry. Could you give us your view, kind of what you're looking at and what you see as those top key macro trends that maybe we're not talking about enough, that you see as a real implication and offer both a challenge and an opportunity to the industry?
Yeah, okay, that makes a lot of sense. Number one is the whole consumer continued use of new channels and automation. We are very good as consumers to just embrace new ways of engaging with people if it makes our lives easier. So we're going to use voice an awful lot more. We're going to use new channels. We're going to use our own AI engines, our purchasing digital assistants on our devices or simply through voice to go do some shopping for us and do some evaluation. But there'll be smarter tools out there that allow us to do more things from the customer side than we've ever been able to do before, and it'll be easy. So therefore, on the supply side, we have to be just as smart, engaging with this new world of brokered transactions between people and organizations, providing smart tools in a way that we want to engage. So consumer engagement is going to change without a shadow of a doubt. Our potential, our habit of wanting to be far more, if you like, transactional in a way, which plays against what I just said about lifetime relationship, is I don't want to pay for something I'm not going to use. So I'm going to increasingly want products to fit me. So this is this personalization thing. So if it's the nature of cover and risk, personalize it to me. I don't care what you do. I don't go out on a Wednesday. I don't want cover on a Wednesday for certain things. I want different cover. I do things at different times. You know where I am. You have the right to know where I am in the world and what I'm doing. Risk goes up, risk goes down. Change the whole model of what you charge me for as I go along. You do that more in smart meters in my home. You tell me how I'm using power so I can do something about it. And I want the same thing for what have been traditionally annual products on a fixed once a year. We change the criteria. I want that to change. I want a transactional variable approach to how you cover my life, and that risk is priced and offered. So that's a very different proposition in the future than, if you like, where we traditionally have come from. I know we're not there thinking wise anymore. We are moving much more towards that personalized life moment risk covering transaction, but there aren't many of them, and there aren't many people providing that, or indeed have much experience of what it's like to do that. So that's number one. Number two is, risk cover for products and compensation is what the insurance industry has always been about. So it compensates you for something bad that's happened to you. In the future, I want risk mitigation as well as risk compensation. So if I can have a device in my home that cuts the water off and stops flooding, then let's do it. But I'm not going to pay for the device, and I'm going to pay you for the same premium for that cover, because the cover's less. So what to you looks like a great benefit of reduced risk for the same premium, to me is lower premium and reduced risk. So we need a handshake about what devices am I going to engage with, and what can you rely on as somebody who's covering me, and therefore what price should that risk be at? So should I spend more on those devices in my home that are reliable, managed well, etc.? Or should I just say, look, I'm not going to tell you about anything I've got that does that. Just cover me for the ultimate risk. And if they don't work, it doesn't matter because I'm covered. So that whole change is mitigating risk, telling me not to go down a road where there was a robbery 3 minutes ago. You know, that is beginning to happen in New York. You're getting social tools that tell you where there's trouble spots in Manhattan, and that's still slow to spread. You know, why wouldn't it? So tell me where I shouldn't go, tell me where I shouldn't drive, tell me there's ice on the road, tell the car there's ice on the road rather than me. There's a whole bunch of things that are going to increasingly require technology to be integrated and form part of stopping me suffering loss at the same time as compensating me when I do suffer loss. That's probably enough on that, isn't it?
that personalization and that risk mitigation really moves us from a static view of insurance to a very dynamic view of insurance that really requires us to have capabilities that can handle a real-time flood of data that's coming on a continuous basis. And then even more fundamentally is to provide continuous underwriting rather than underwrite once and you renew in a year type of thing. It's a continuous underwriting, and that fundamentally is a different process and different technology.
Yeah, it's exciting, isn't it? Because it actually covers exactly the same issue. Is insurance has always been about risk. It manages risk. It prices risks. It monitors risks. It compensates for the actuality of risk happening. So it is only exactly the same thing, but this time, how about I don't suffer the loss? So actually, you go from being a distress sale, which isn't strictly true, but many people call it that. It's a distress sale. It's one that has to be sold to me because I don't want to buy it. I don't really enjoy the experience, but I have to have it. Sometimes it's mandated by law, and that's fine. But how about something that actively builds up a whole storyboard of cases where it's helped people avoid risk? You're not burgled. You're the only house in that road. You didn't go down that road and 5 cars slid on ice and they crashed. And people went down that road after you and they got mugged. I don't want to visit that on anybody, by the way. But the bottom line is, if you can do more proactive things, how quickly is that word going to spread to others? The actuality of how your life is better because of them, and how much loved is that provider going to be than somebody who simply may compensate me, that's that whole claim thing, after something bad's happened, or may tell me I'm underinsured or I got something wrong and therefore may not pay me. It's a doubt, it's a claim, it's not actual. The other way is, don't go down that road, someone was mugged. Or don't go on that road, it's icy. We've turned your water off, your house is the water pipe's leaking. Those are real things. I think it'll change the industry.